Deborah, if you're in position to, the recording is going, so we are good. So good afternoon, everyone. Welcome to Remote Work Wednesday. On behalf of the Remote Online Initiative and the K-State Research and Extension Community Vitality Team, we're very glad to have you join us. I'm Ron Wilson, Director of the Huck Boyd Institute for Rural Development at K-State. A big thanks to Deb Oldie, who's online with us. She's with the North Central Regional Planning Commission, and to Deborah Cole, who's Program Leader Coordinator for K-State Research and Extension Community Vitality. So we really appreciate those partners. Just a quick word of background. This is a project of the Remote Online Initiative. You see the image there on the screen, and that website is www.kansasremotework.com. This initiative has been launched in partnership with Utah State. We're offering month-long online classes which enable the participants to become certified as a remote worker or remote work team leader. And Remote Work Wednesday is intended to be a Zoom call on the first Wednesday of each month to help explore the opportunities and challenges of this emerging field of remote and hybrid work. The goal is simply to learn about the opportunities and challenges of remote work or hybrid work, work from home, for those who choose to use it. This is supported by a Network Community Solutions grant from the Network Partnership for Community Investment. It went to our partner, the North Central Regional Planning Commission. You'll see the logo for the Network Community Solutions grant. We appreciate that. So we'll get into our content. When we think about working from home, oh yeah, thank you. I meant to mention our next month's, and we'll come back to this, our next month's Remote Work Wednesday will be on March 6th. So again, first Wednesday of each month now for the immediate future. And that one we'll be talking about some of the barriers to remote work as well as current trends. So when we think about working from home, we think about pros and cons. We may not think about the tax implications. And so this has real bottom line significance. And so we have a terrific speaker to help us think through some of those issues. Dr. Amy Hageman is our speaker. Amy is the KPMG Ralph Crouch Professor in the Department of Accounting in the K-State College of Business Administration. Just very briefly, she earned her BS degrees and her Master's of Accountancy from Kansas State, got her PhD from the University of Central Florida. I suppose went down there to see, if they could be Big 12 members someday in the future. Yeah, right. She has been an outstanding faculty member, and I can't go through the resume in depth. Numerous academic articles. Here at K-State, she won the Developing Scholar Award, multiple Outstanding Researcher and Outstanding Teacher Awards. Shows she's a tremendous resource here on the K-State campus. I have seen her described as a wife, mom, professor, and lover of all things chocolate. So, maybe we should get some Valentine's chocolates over to Amy to thank her for today's presentation. But we're so pleased to have Dr. Amy Hageman as our speaker today. Amy, please help us think through some of the tax implications of working remotely in Kansas.
Absolutely. Well, thank you, Ron, for that very kind introduction. While I'm chatting, I'm going to share my screen so we can see some slides today. So, see, there we go. As Ron mentioned, I've had the pleasure of working at K-State as a tax professor. This is my 14th year on faculty. I'm a Kansan born and bred, lived here growing up and through college and whatnot. And ironically, when I first got out of school, I worked for one of the public accounting firms doing state and local tax consulting, which is what some of the remote work implications have to do with. That's been 20 years ago, and it's changed a great deal since then. But it's been fascinating to see how some of those areas have continued to develop and emerging trends can continue to influence things. So my goal for our talk today is for it to be really interactive. So if you ever have a question, feel free to just pop in, or if that isn't possible, like raise your hand in Zoom or whatnot, but you don't need to do that. You can just start talking if you have a question, just because I want to make sure this is as helpful and as tailored to you as it can be, in understanding what might be on your mind in terms of tax implications for remote work. So when I started thinking about how to give a framework for thinking about this, I came up with it's really the wild west of working remotely. That's something that we've seen over time. People have worked remotely for a great deal of time, but the pandemic really accelerated that trend when a lot of people were suddenly in a situation where they were working from home more than before. And what we've seen since the pandemic is that some of that has continued. Some people who always were in the office, a physical location of their employer all the time, are now working remotely. And what I've seen also just in my field in accounting, that there have been a lot more hybrid work situations where people might go into the office 2 or 3 days a week, but work from home 2 or 3 days a week. And that's been a huge change. And also, even what does it mean to be home? Like, does it mean that I go back to my house where I like live most of the time? Or am I in an RV camper and I'm having like the time of my life with my husband and kids? And maybe I'm working in different states in my RV camper. So lots of different ways that we can work from home. And with that, that brings about lots of different things to think about in terms of what are the tax implications of working remotely. So what I would say overall, if you leave nothing else today, I'd say kind of my big picture takeaway is working from home is awesome and it's wonderful and it's flexible. It can also have tax consequences. And depending on your situation, which we'll get into more what those details might look like, but depending on your situation, there may be tax consequences if you work remotely in Kansas, like you're Kansan and you work remotely for an employer. It also could have consequences for employers who employ remote workers, whether that be those employers are employing people who are working in Kansas or elsewhere or whatnot. So both workers and employers have tax consequences that may be different than if they were working in a physical office. And your own situation may be complex. It may not be complex, but oftentimes it may be more complicated than we think, maybe at first blush on paper. So my personal advice is just the first year that you work remotely, especially if you're working for an employer who might be in a different state than you are. My personal advice would be it might be worth it to hire a tax professional for that first year just to get a good lay of the land of what that situation is. And it may be a situation where maybe it's not complicated for you, maybe things are pretty straightforward, but anytime that you're changing that environment from a physical presence to an an at work, home presence, it would definitely be worth it to get some professional advice before moving forward, just to make sure that you don't have any unforeseen tax consequences. So that's kind of our big picture takeaway. Working from home remotely can have some tax consequences, both for the workers and the employers. Maybe worth it to hire a tax professional moving forward. So I thought we'd start just kind of in your mind. You don't need to say anything out loud, but I thought we'd have a couple of kind of true false questions that you could think about, and then we'll kind of talk about how those would be structured. Thinking about what you may or may not know already about tax consequences from working remotely. So first question, does each state have its own tax laws related to remote working? So sometimes when we think of tax, and I teach tax at K-State, but focusing on federal issues. And when we think about federal, we think, oh, we're all under the same tax system. We're all US citizens. We all have that same law. So in terms of states, are each state, do they all treat taxes the same? So that is actually the case that each state does have its own tax laws. And that's something that was a shock for me when I worked in public accounting. Coming straight out of school, I thought like, oh, I've concentrated in tax. I really know a lot about tax. And then when I was assigned to be a state and local consultant, I realized, oh my gosh, there's 50 separate set of rules that we're looking at. And if I'm a business that's doing business in more than one state, I have to know all of those different state rules. And then on top of that, a lot of states, their cities or counties or school districts or even like lower municipalities, they might have their own separate tax rules. And so it's not the case that we can say, okay, there's just one set of rules. You follow this. That would be the case for how remote workers are treated. Unfortunately, it's the case that every single state is different and they're changing all the time. So it's constantly shifting what that environment and what that looks like. And because remote working is such a new phenomenon, and in the numbers that we're seeing now, a lot of states are constantly shifting how they want to treat those kinds of tax issues. So kind of keep in mind, it's really the Wild West. It's really new, but that there are 50 different set of rules, and actually even more, because a lot of states going down to those lower municipalities might have additional state tax rules on top of that. So next kind of question to think about, if one does not change their state tax withholding to reflect working remotely, would it be possible to experience tax consequences? So doing our withholdings, thinking about, do we need to make any adjustments or think about any tax issues if we are working remotely? And unfortunately, that's correct. If in certain states and certain situations, if your withholdings are not adjusted, you may end up owing state taxes when you file at the end of the year. And then on top of that, may unfortunately have interest and penalties, just if those were not accurately adjusted to reflect that situation. So just thinking about, that's something that we want to learn more about and make sure that we are staying on top of, just to not owe any unnecessary interest and penalties. Another question to think about: must state income taxes always be paid in states where individuals work remotely? So if I'm a digital nomad, I'm going in my RV, going through states, working remotely here, there, and everywhere. Would every state that I work in, would that necessarily have a state income tax obligation resulting from that? And that's actually not always true. That's false. Often it's true, but not always. Several states do not impose a state income tax on individuals. One state that I'm really familiar with is Florida, from my time at UCF in their pre-Big 12 era. And that was one thing that was a great surprise when I moved there, to realize, oh, there's no state income tax. They have so many tourists in that particular state that they get a lot more revenue collected from sales taxes. Other states have different, like maybe they have a lot of oil or energy tax collections. And so not every state will do this. Now, unfortunately, Kansas, as we're probably familiar with, does require this. Kansas does have a state income tax that would be levied on individuals. So as we're going to talk about, if you are working remotely in Kansas, that would be a state tax obligation that we would have from that work, but not every state would. So again, worth talking to a tax professional about. And then, do the number of days worked outside of the state where your physical office or workplace is located impact the number or the amount of state tax owed? So does it really matter the number of days or how long that you worked in a particular state or location? And that is true. So a lot of states, again, 50 states have 50 different rules, but a lot of states will have different rules in terms of what period of time that you work in that state that would trigger a state filing obligation. So some states, it's as little as 1 day. That you could be like, I'm on vacation, I'm on the beach, I'm in California, I work 1 day, and that may, in some states, be something that would trigger a state tax obligation just for that period of time. Many other states, though, are not quite as stringent. Instead of 1 day, it might be 30 days, or it might be some other kind of baseline. But the best way to address this and to make sure that you are properly meeting all of those obligations would be to track the number of days that you work, even if it's remotely, from each state. And I would say even more than just from the state, I would track your location, just because certain states like Ohio is notorious. They have a million different extra city, county, etc. income tax laws that can vary by where you are. So the more specificity you can track where you're working from, the better position that you'll be in the end of the year when filing your taxes. Just as kind of an aside, I think it's interesting that people who are considered entertainers, oftentimes as little as 1 day in a state for entertainers is usually enough to trigger a tax obligation. So if you're Taylor Swift or Travis Kelce or any other like sports or music or actor or people that travel around, I would not want to do their taxes personally unless I had a whole team to help me, because they have very complicated taxes, in part because every state that they perform in, they have a tax obligation to file in. And those laws tend to be a little bit more stringent for entertainers or sports professionals or whatnot. But again, worth making sure that you've tracked where you did your work so you can sort that all out at the end of the year. So to give us a little bit of background, so hopefully we are kind of getting the idea that most of these state tax laws and different treatments of remote workers can really vary from state to state. One of the reasons for that it can be so complicated is that state tax laws were written for the most part in a different era. And in the era that they were written, this is a time when most workers would perform their work at an employer's physical location. So I would go into work, I would go into the office, the location of my employer would be where I would be employed and perform my work. And so most state laws, the way that they are written to tax workers' income on the basis of their physical presence that generated income within a state, which made sense back when we had large offices and large headquarters and large factories that were the predominant workplace for most people doing work. But that is still how the tax law reads, that it really matters the physical presence of where you physically perform the work, even though so much more of our work now is done by people whose physical location of work is different than the physical location of their employer. So that's one reason we end up with more complexity and maybe some different tax obligations, is that we are in a different physical presence doing work than maybe our employer is. And we'll talk a little bit here soon about different scenarios that we could have in terms of where you're located versus where your employer is located, how that could trigger tax consequences. So the main reason that we get complexity is if I'm a worker and I live in a state, like maybe I live in Kansas, I work in Kansas, I do work in my house in Kansas, but I work remotely for an employer who's located in another state. Let's say I work for New York. My particular employer is a New York office, but I never really perform work in New York. I perform work in Kansas. Now, in that case, the way the tax laws are written, I would still owe state income tax to my home state, to Kansas. So I still have this obligation to Kansas. And then where it gets really confusing and kind of weird is that often you do not have to, you would not end up owing taxes to the state of your employer. So often you would not owe taxes to where your employer's based if you were not physically performing work in your employer's state or in your employer's location. But the big caveat, some states do require you to still pay taxes to your employer's state if you are considered to be working from home under this, what's called the convenience of the employer test. And the idea is, are you working at home for your own convenience? If that's the case, you may still owe taxes in your employer's state. And this is shifting all the time. The most recent states where if your employer is located in those states, even if you are doing work in Kansas or elsewhere, you would still owe taxes to that state. So there's 4 northeastern states and then 1 neighbor to us. Connecticut, Delaware, Nebraska, our neighbor, New York, and Pennsylvania. So a lot of those are kind of that eastern seaboard, northeastern, New York, Pennsylvania, Delaware, Connecticut area, but also Nebraska. So that's something just to be aware of. And when I looked up to get an updated list on this, it seems like states all the time are going back and forth whether they want to have these rules or not have these rules. So even though this is the case most recently, by the end of the year, other states could be on this list, or others, or some of these states could be off this list. So I say that not to like have you memorize or think like, oh, I need to know exactly like which state this applies to, but just be aware that because of that, there could be a case because your employer is located in this other state, you might still owe taxes to that other state. That's the big reason I really would advise to see a tax professional if you are working remotely, especially initially, since there are these states and there's been court challenges and judicial rulings. So far, they've been allowed as constitutional, but that could change too. So currently, in certain states, they have decided that if you are working for an employer in that state, even though you don't physically do work in that state, you may potentially owe income taxes to that state. So let's go through a couple of scenarios in terms of where you could be versus where your employer could be to get a handle on how this could be carried out. So if I'm a remote worker in Kansas, let's say that my employer is located in Kansas and I work remotely in Kansas. As a general rule of thumb, that is a simpler situation for taxes. That is a less complicated situation because I'm physically doing work in Kansas. I'm working for my employer whose physical location is in Kansas. And even though maybe we're in different parts of Kansas, like I'm at home and my employer is in an office building downtown, we're still both in the same location, typically in Kansas. And Kansas is nice in that it does not have the same complexity some other states do in terms of having additional taxes on cities, or that cities or counties or other municipalities are levying. Kansas, if you are located in Kansas and your employer's located in Kansas, that's going to be a lot more straightforward. You would file a Kansas state income tax return as a Kansas resident. You would report the income that you earned from performing work from your location in Kansas. You'd be taxed as a Kansas resident, and it would be pretty straightforward. So if you know for sure that's your situation, that's great. That's going to be a lot simpler come tax filing time because you don't have multiple states that you're dealing with. So that's a lot simpler. Now, you might have a situation where your employer's in Kansas and you work remotely from both Kansas and from another non-Kansas state. Let's say that you are a remote worker, but because you're a remote worker, you have a lot of flexibility and you might think, I'm going to go up to like Upper Michigan for the summer. And I'm going to just work for 3 months in Michigan for like 3 months, which, escape the heat, be lovely. That's great, but that's going to trigger potentially tax consequences because you would still need to file a Kansas income tax return as a Kansas resident. And you also, on top of that, may need to file a state tax return for any additional states that you worked remotely in. So I may, in this situation, need to file a Michigan tax return because I was in Michigan for 3 months working from Michigan. And it varies from state to state in terms of the number of days that you have to work before that's going to trigger a filing obligation. So again, some states it's as little as 1 day. Most states it's a higher threshold. Most states it would be like 30 days or whatnot, but it varies from state to state and it changes all the time. So best thing you can do, track where you're working. And then at the end of the year, you can talk to your tax professional if it's a new situation about here's where I worked during the year. Do I have a different filing obligation if I worked outside of Kansas for this period of time? And many states give you would have a situation so that you would receive a credit for taxes that you did pay in those other states. This is a situation that many people have that I've experienced when I worked in Kansas City. I lived in Kansas as a lifelong Kansan, but I worked on the Missouri side of the border. So it was a situation where I had to file both Missouri and Kansas tax returns, but I got a credit for taxes paid in other states when I filed my Kansas return. So same idea here, only instead of maybe your employer being located across the border, maybe you're traveling or you're vacationing or you're performing work in another state. That can trigger another state filing obligation, but typically you may receive credit for taxes paid in other states so that you're not being double taxed on that income. Another situation that is complicated, this is again that I'm working from home in Kansas, I'm working remotely in Kansas, but my employer is not physically located in Kansas. And this is often a very common scenario, especially in the post-pandemic times when we've seen a lot more flexibility. We've seen employers even hire people. I have a friend who works for DC, but she lives in Manhattan, Kansas, where I do, but her company's office is in DC. And that's a situation where the tax consequences are just going to be more complicated because you are not physically located in the same state as your employer, which is the way that tax laws were originally written to accommodate. So tax consequences are going to be more complicated. And we mentioned this a little bit earlier, but just to reiterate it, in some states, you can end up with double taxation because they will tax you on the income that you earned from your employer located in their state, even if you never physically set foot in that state, which is crazy. But that's kind of in the Wild West, that's been ruled constitutional. Oh, I see a hand. Awesome, Laura.
Yeah, I have a question. So do these same tax implications apply to 1099s?
Yes, yes, correct. So, and we'll talk about that a little in terms of 1099s versus W-2 workers, but it would be the same idea. Yeah, in terms of whether you're an independent contractor or you're considered a W-2 worker.
Okay.
Yeah, great question. Yeah, because I think that's almost, and that's a great point that Laura had. A lot of people who are working remotely aren't necessarily what we would think of as traditional W-2 workers. They're often independent contractors or compensated on 1099s from their employer. Yeah, great question. So this is something regardless of your W-2 status or not that you'd want to be aware of, like thinking of what those tax consequences could be. So some states, not many, but some will have double taxation to the extent that you would end up owing tax in both Kansas or wherever you perform the work, as well as the location of that employer. And you would, in this case, you'd also still file a Kansas income tax return as a Kansas resident. But depending on the state, then you could still receive a credit paid for taxes paid in other states. So in terms of some Kansas specific rules, one thing that the Kansas Department of Revenue is very explicit about are the wages that are paid to employees for remote working or for teleworking, are they subject to Kansas withholding? And the Kansas Department of Revenue takes a very bright line test. Any wages that are earned for services that are performed in Kansas are subject to Kansas withholding. So that would be something just to make sure that you're either your independent contractor, that you are making estimated payments, or if you're a W-2 worker, that there's withholdings that are going on. That's going to be really critical because in Kansas, those wages that are earned are considered subject to Kansas income tax. And then this is super long, but this is just from the Kansas Department of Revenue website. What's the proper amount to withhold when my employee is teleworking or working from a remote location other than my business location? So this kind of reiterates again, any services that are performed in Kansas that are compensated subject to Kansas withholding, regardless of where the employer is. In order to determine the amount of tax, it really matters where the location of the employee is. And then if you're working remotely, it's really important to track where that's going to be located, which can be difficult if somebody's working remotely. So Laura had a great point about some differences between W-2 workers and 1099 independent contractors. So one issue that sometimes comes up when we're dealing with working remotely and those tax consequences would be, are you eligible for a home office deduction? Because very often, if you are working from home, you often have a home office space that often you've set up in order to carry out your work. If you are a W-2 worker, meaning you receive a W-2 come tax time, you're considered an employee of a company. The way the tax law is currently written, you are not able to receive a home office expense deduction. So any W-2 workers not able to get any home office expense deduction. And unfortunately, it doesn't matter if you work at home 100% of the time, 50%, none of the time, not eligible for a home office expense deduction. And that's something that has changed over time. In the past, you may have been eligible, but starting in 2018 with the Tax Cuts and Jobs Act that was passed then, they made a lot of changes to the tax code. And one of those changes was W-2 workers were no longer eligible for a home office deduction. Now, you could still ask your employer to reimburse you for those expenses. And if your employer reimbursed you, that would be treated like any other business expense that would be reimbursed and wouldn't have tax consequences. But if you are setting up work yourself that you're paying for, unfortunately, you're not able to get a home office expense deduction if it's not reimbursed. So that's if you're a W-2 worker. Now, if you are a 1099 worker, so you're an independent contractor, or you're a business owner, so you're a sole proprietor, you're a partner in a partnership, you're an owner of an LLC, some sort of business owner of an entity, you may be able to take a home office expense deduction. And the way that that would be determined is you'd have to have a home space that was used exclusively for business purposes. So you'd have to have a room in your house, or maybe it could be, an attic or basement or like, but a specific room in your house that's used exclusively for business purposes. And I've seen people say, even just as tax advice, like, take a picture of your room and show that, like, no, this is really a business office. It's not just something that's like a guest room with a spare bed and drawers and whatnot that sometimes I park my laptop in. This is a dedicated space. And that's something that sometimes I hear from people that they're afraid to take a home office deduction, that would trigger an audit, or that it's not worth it. My personal advice, if you are a 1099 worker or you're a business owner and you qualify, it's worth it to take it. I mean, this is an additional expense deduction you're able to take for a valid expense. So I would track that accordingly. And if you are in that situation where you're eligible to take it, you can take a deduction using the simplified method, which is just based on square footage. So that's kind of the easiest method. If it's like a 10 by 15 office room, then it would be based on that 150 square feet. Or there's the regular method that's based more on actual expenses that would require a little bit more tracking. Sometimes that can result in a higher deduction for people using the regular method versus the simplified method. But again, unfortunately, if you're a W-2 worker, even if you work from home 100% of the time, you're not eligible for that tax home office expense deduction. So we've talked so far about consequences for the employees. Like if I'm a worker, one thing I want to touch on just super briefly would be, what are the consequences as an employer of remote workers? Like maybe I own a company and I employ remote workers. What do I need to know for tax purposes? And my big takeaway for that would be, employing even a single remote worker in a state could potentially trigger that company to owe additional taxes in that state. And that's because the idea of a lot of state taxes is based on this principle of what's called nexus. And nexus really means presence. So if you had a physical presence in the state, it can trigger taxes. And maybe I am an employer, I'm a Kansas employer, I'm a Kansas company, but maybe I employ people who work remotely from, we'll say, Wyoming. Well, in that case, potentially, I might now, as a Kansas employer, I might now owe taxes in Wyoming that I didn't owe before because I now have remote workers in Wyoming, even in some states, even as few as one remote worker. This can trigger corporate income tax. It can trigger you to have an obligation in a state you may not have had an obligation in before. It can affect your payroll apportionment factor for certain states. So that could affect what percentage you would owe in that state. You may have to register for licensure or registration with the Secretary of State's office. So now I have to say, well, I'm now doing business in Wyoming. So I now go through the Secretary of State's office. I may now, this is kind of a pain, I may now have to do sales and use tax withholding in that state because now I'm considered to be doing business in the state. And so whereas previously I could say, well, I don't have a physical presence, I don't have to withhold those taxes when I make a sale. Now I do if I have a remote worker in that state. I may owe unemployment in that state. There is a pretty set federally defined in terms of kind of like a hierarchy in terms of what state gets the unemployment payment for a worker. But if a worker is only working in one state, you're going to need to pay unemployment often to that state because they now would be considered an employee of Wyoming or whatnot. And you may also have to do employee withholding. In terms of I might need to, based on the laws of Wyoming, I might need to withhold Wyoming state taxes from my employee's check that I'm paying. So I know we're focused more today on the consequences for workers, but also if you are employing people, if you're a business owner, you're someone who employs people, just be aware that having remote workers in other states outside of where you are physically present and have registered and licensed to do business, that often can trigger this cascade of additional tax obligations and filing obligations. And oftentimes it's not necessarily that the amount would be super high, it's the complexity that you now have this additional filing requirement that you didn't have before. And it's a myriad of laws that you're trying to figure out and do. So again, my advice, if you are a business owner and you employ somebody outside of Kansas for the first time, my advice would be to hire a tax professional when you're doing that, just to make sure that you're not forgetting any type of filing obligation. So with that, I have a couple of specific suggestions for remote workers in terms of what you can think about for tax consequences. And I would say these are true for W-2 workers as well as 1099 independent contractor workers. Track the number of days worked in each state. So keep records. Oftentimes, larger companies will have this built in or require you to do so. Smaller companies often do not have this built into the reporting system. So I would highly advise you to track where you are working and try to be as specific as you can about location, just because some taxes will be different by the city or the county or wherever you're located in. Kansas does not have that level of specificity. One state in particular, though, that I've mentioned that is just awful for complexity is Ohio. I think they have like 5,000 different municipalities that all have different rules and rates, and it is a nightmare. So if you are vacationing in Ohio, be very specific about where you have done your work to make sure that you are properly complying at the end of the year. So number one recommendation, track where you're working. Number two, check your state tax withholding. If you are working remotely in Kansas, those wages are going to be subject to Kansas withholding, even if your employer is out of state. So your employer, if you are a W-2 employer, they should be withholding that for you. If not, that's something you want to talk to your employer about, because you could potentially owe interest and penalties when you file your taxes for not having properly withheld, not having paid the proper amount of taxes throughout the year. So if you are working remotely in Kansas, make sure that your employer is withholding those Kansas payments. If you're a 1099 worker, make sure you're making estimated tax payments to Kansas if you're making performing services, performing work in Kansas. And especially for the first year you work remotely, or especially for the first year that you may employ somebody who's working remotely, I would say it's worth it to pay for a tax professional especially that first year, to make sure that you've gotten good guidance about your specific situation, with the caveat that things are changing all the time. So it doesn't hurt just to keep in touch with the professional to make sure you're abreast of current laws. So for additional resources for this is something that there isn't a lot of great, like in my opinion, it's not like you can just go to the IRS website and there's a publication that says, here are the tax consequences for remote working in X state and Y state. So it's very piecemeal, which can be frustrating if you're someone that just is trying to make sure that you're following whatever rules and regulations are in place. The AICPA website is often a good place to start, just because the information is put out by CPAs, by certified public accountants. So it tends to be pretty vetted in terms of what is current and what's going on with that. Couple of articles that I think are really helpful. One is the Journal of Accountancy. That's a practitioner piece that's really great. Like it's super well vetted and reviewed to make sure everything's really accurate. That publication. And there's a really good article called Understand the Tax Consequences of Remote Work. It was published at the end of 2022. That's a great kind of beginning step to look through. And I was pleasantly surprised. Sometimes the popular press gets things really wrong when it comes to taxes. This was actually a good article. This is from USA Today, and it was called Work from Anywhere Downside, Potential Double Taxation from States. And this talks a lot about the states that do have that double taxation, the Connecticut, Delaware, Pennsylvania, New York, Nebraska rule. And it was just published last month. So it's super current and relevant. I'd say that's a good resource to look at if that's something you're concerned with. And then this last one, it's a little more technical, but if you're wanting like more of a big picture, what are some of these tax consequences here? The National Conference of State Legislatures has a white paper that they published last year, and it's called State and Local Tax Considerations of Remote Work Arrangements. And the one thing it doesn't have like a state by state matrix, which I think as someone who used to work in this area would be super helpful to be like, this is how this state treats this. But it tells a lot about what are some of the issues you might want to think about. And so if you're wanting more of a big picture framework, that can be a good place to review too, to go into that. So with that, that's my prepared remarks on this topic, but I wanted to make sure that we left time for questions and discussions and whatnot. So at this point, I will stop sharing so we can see everyone a little better. But does anyone have any questions about remote work or tax consequences, or anything that came to mind that you'd like to discuss more?
Amy, while people are thinking, we talked about the employee.
Right.
Off the top of your head, for the entrepreneur or the freelancer, any unique distinctions that you would think of?
Yeah, so for the entrepreneur, I would say a lot of these rules still apply, like in terms of the physical location of your work really matters. But also on top of that, making sure that you are registered and licensed to do business in whatever state that you as an entrepreneur might be working from remotely. So that would be my huge piece of advice there. And if you're working remotely consistently from the same state, that's going to be a lot simpler than if you're working remotely from 25 states over the past year. So just making sure that you are properly registered and licensed with the Secretary of State and whatever state that you might be as an entrepreneur performing that work. And then again, I would say that you might have additional obligations come tax time. You might, if you're selling a product, if you work remotely, have to collect sales and use tax from that state where you're working remotely as an entrepreneur. So I'd say that those entrepreneurs have both the employee and employer consequences. So they almost have the worst of both, like just more complexity all over for both for any business owners or entrepreneurs.
Thank you.
Yeah.
See if there are other questions.
Yeah, that's a great question.
I might ask too, excuse me, about the accounting profession.
Yeah.
I mean, obviously there are certain things, you know, the worker on the shop floor is an in-person job. There's no
Right.
getting around that hands-on manufacturing. But the knowledge workers, we've seen the trend toward hybrid and remote work expand so much. In the accounting profession, is that one that
Yes.
lends itself, and or do you see any trends?
Absolutely.
Connection?
Yeah. That's a great question. So in terms of the accounting profession, what I have seen, just talking to some of the larger firms, and I think this would be true of smaller firms too, there's very much a trend toward hybrid working. There was some discussion kind of in the heart of the pandemic, maybe no one will ever go back to the office. Maybe we'll work from home remotely forever. And I think a lot of accounting firms found that, well, we really do lose out that they felt that they lost when people were never in the office and never had the opportunity to connect face to face. So most of them have gone to between like 2.5, 3 days a week that you should be either in the office or physically at a client's location. And the other 2 to 3 days a week, you could work remotely. And that's something that when I talked to accounting firms as recently as November, they've said, oh, that's not going away. Like that's we're going to all have to learn how to deal with this moving forward, because it's something that people are adapting to. It's seen as something that new hires it really respond well to. And they found in the accounting firms that I've talked to that it didn't affect their productivity when they still had those 2 to 3 days a week in the office, that people were just as, if not more productive, when they could have a little flexibility as well. So yeah, so the accounting profession, I think, is in a huge change. I was telling my family when I worked in public accounting like 22 or whatever years ago, that I broke my foot one time. And I remember thinking, gosh, it was so nice. They let me work at home that day. Like I didn't have to drive downtown. This one day I got to like work at home so I could go to the doctor. And now it seems like that's totally swung the other direction, that sometimes I hear grumbling among students who are going to be newly hired of, why do we have to go into the office at all? Like we should be able to do it all from home. But they're trying to strike that balance is something I think is going to continue into the future. But I do personally see the accounting profession from what I talked to, not going back from having some of that hybrid.
Yeah, very interesting. We hear employers saying, you know, talent is essential. We've got to get talent. And to do that, we've got to be more flexible in terms of those remote work arrangements. There is a question in the chat.
Yeah. So I am currently a non-resident. I do track the days I work in my own business when I am out of state and overseas. How many days can I stay in Kansas before Kansas considers me a resident? And I think, and I'm going off the top of my head, so I'm sure we have people who know better. So if I say wrong, please tell me. I think for Kansas to be a resident, you'd have to be more than half the year before you'd be a resident. Is there anyone here who thinks differently? Okay, that is my understanding. I can, if you want to send me an email here, let me write my email in the chat if you want to follow up. I'm happy to actually like give you a right answer instead of an off the top of my head answer, but that is my off the top of the head. It would be half the year. We have another great question in the chat from Laura. I've worked as a contractor since 2014. In 2022, 4 others and myself formed a company that was an S corp. The company is based in Missouri. I live and work in Kansas. Prior to the company's formation, I had a good idea of where my earnings could land based on my farm expense offset. As an employee, my taxes last year were painful. I'm considering going back to a 1099, which would also save our company from paying the Kansas employment taxes, correct? Any insight? Yes. So that's a great question. Again, off the top of my head, I think that that they would you would not be treated as an employee if you were a 1099 contractor. And so that does cut down a lot of the other withholding and unemployment tax requirements. So that's something that's such a great point, in that sometimes people will say, oh, it's always better to be an employee, like because you get benefits or whatnot. And this is a great example of how that's not always the case, that can be more complicated. But that would be my understanding. And that's something too, like anyone, if you have more specific questions, that if you want to shoot me an email, just so I can like look over stuff and then get back to you if like you have a more complex situation. But off the top of my head, that's what I would think, that would be one way that you could save some of those reporting obligations. And I'm sorry it's been such a mess. Like, I feel like taxes and registration and regulation are just such a deterrent for people who just want to start small businesses and be entrepreneurial and grow their enterprises. And so I'm sorry to hear that. It's not the first time I've heard similar stories and about regulation sometimes cutting down on growth. And so I'm sorry that's been a burden.
I appreciate that. Excellent dialogue. Are there any other questions? Well, obviously, is this the same for remote teachers?
That's my understanding. Yes. Like anyone who's a 1099, even if you're a remote teacher, 1099 or whatnot, that would still be the case, that you would want to track where you're performing that remote teaching from. Right. So same principles here. You'd still want to track where you're reporting your time. If you're working from Kansas, you'd have an additional tax liability for Kansas. If you're working as a remote teacher outside of Kansas, then things get more complicated if you're a Kansas resident.
Great question. Other questions? I agree. Great info is the comment in the chat.
Oh, great.
I certainly agree. Very, very informative. I tell you, a typical reaction of the students who have taken our remote online class is, this is more complicated than I thought.
Right. And I think that's a great takeaway. Remote working is more complicated on many levels than we might first think. Absolutely.
I'm not seeing any other questions. Let's give a remote round of applause, a virtual round of applause to Amy for a really terrific and informative presentation.
Amy, I have one more question. I'm sorry. I wanted to ask before everyone hopped off here. So if I still held contracts in addition to being an employee of this company, so I'm still receiving 1099s for the 2023 tax year, can I still write off my home office even though I was an employee?
My understanding would be, if you're a 1099 or business owner, that you could write off your home office. Yes.
Okay.
So
do I have to account for a percentage of my total income, and that's the percentage that I can write off, or can I just write off, as I have in the past, the percentage of my home versus my office?
Exactly. Percentage of your home versus your office.
Okay.
Yeah.
Thank you.
Yeah, exactly. Yeah, that's a great question.
And a comment in the chat that, based on her own accountant advice, that would be the correct situation. So.
Okay, good. Yeah, yeah. So I think definitely 1099s and business owners would be able to do that, right?
Well, there are real dollars and cents implications to all this, and I really appreciate the information you've provided, Amy. So again, thank you. You've earned some Valentine chocolates. We'll have to get some.
I'll have to go down and get some. Yes, thank you for I appreciate noticing my love of chocolate. That's very kind.
And Deborah has put in the chat a link to registration for March. Excuse me. So the Utah State Remote Online Initiative team will be with us to describe some of the most recent trends in remote work, as well as barriers, some of the obstacles, challenges to remote work that we're encountering. So be sure to join us. Watch for that info. You can go to that link and learn about the remote work program for March. Thanks again, Amy, and thanks to all of you for joining us. Our next Remote Work Wednesday will be on March 6, 2024. So watch for the info, and we look forward to having you join us then. Thank you so much, Amy, and thanks everyone.
Thank
Have a great
you.
day.
Thank you.